Hello friends, welcome back to my channel. This is Abhijit Roy. I'm an ex-banker of 20 years and currently I'm trying to make you understand financial thing in a very layman language. So today we are going to discuss about a business cycle. How does a business works? So without your further delay, I will just straight go on to the slides that I've created for you all. The business cycle is the natural fluctuation of economic activity in a country that happens over a span of time. So if we think what is a business cycle and how does it work, or what are the layers of different layers of a business cycle? First is expansion, then there is peak, then there is contraction, and there is trough. So if we speak about the importance of the economic cycle, the economic cycle is characteristics by period of expansion, peak, contraction, and trough. These phases represents the ups and downs in the economic growth and can have a significant impact on the various aspects of a national's economy. In terms of expansion, if we suggest what do you mean by expansion, or how does it signifies it? This phase marks a period of economic growth, right? It is characterized by increasing consumer spending, rising business investment, higher employment levels, and overall economic prosperity. So during this phase, particularly we find that business experiences increases profit and the stock market tends to perform well. If we talk about the causes, the factors like low interest rates, increased consumer confidence, and government stimulation measures often contributes to an economic expansion. If we think about the next cycle, that is was known as peak. The peak is the highest point of the economic cycle. It's characterized by a robust economic activity, high employment level, and often high inflation. At this point, the economy is at or its near full potential, and there may be a sign of overheating. So what are the factors for this peak? Factors like tight labor markets, excessive speculation, and capacity constraints can contribute to reaching a peak. Next we have contraction or recession sort of thing. So during contraction, you must understand the economic activity starts to slow down, right? There is a decline in a consumer spending, business environment, and overall economic output. Unemployment tends to rise. Secondly, the business may start to cut back on production. And what are the causes? The various factors like higher interest rates, reduced consumer confidence, and external shocks like a financial crisis or geopolitical event can trigger a recession. Then this trough. The trough is the lowest point of economic cycle. It represents the end of the contraction phase. The economic activity is at its lowest, and unemployment is typically at its highest. However, it's a period of transition where the groundwork for the next expansion is laid. So what are the causes for this? The policy measures such as interest rate cuts and government stimulus, along with the natural market forces, contributes to the economy bottoming out. Next, we should understand that what is the next step, how does it matters. So it is important to note that the length and severity of each phase can vary widely from one economic cycle to another. Economic cycles are influenced by a complex interplay of factors, including monetary policy, fiscal policy, external shock, terminology, advances, and more. Understanding the economic cycle is crucial for policymakers, economists, businesses, and investors. It helps in making informed decisions about monetary and fiscal policies, investment strategies, and business planning. However, predicting the exact timing and duration of each phase can be challenging, and unexpected events can lead to deviation from typically a particular cycle to another. Like as I was mentioning, there are 4 cycles. So it might be different, it might take a lot. So if we try to figure out where each sectors are lying at this point. So if we go to the sector valuation at a glance, if you see, this is as of 31st of August 2023, Motilal Oswal research data, basically this is a source. So if you see this segment in terms of the auto P ratio was at 20.7, a 10 years average is 26.7, right? So the premium is almost 22.5%, it's less actually. So bank is at current P is as of 31st of August is 15.2, and the 10 years average is 20.7. Bank's PSU, if you see, at 6.2, and in 10 years average was 10.4. NBFC's current P was at 16.8 and 10 years average is 16.5. Cement, if you see, it was at 28.50 and 10 years average is 26.4. Consumer P was 42.1 and 10 years average P rather I should say it's 40. So healthcare likewise is 26.7, the current P, and the average is 26.3. You see the media also, media is at currently at P is at 20.8 and 10 years average P is 25.1. Metal 11.1 average is also similar 11.3. Oil and gas 11.4 is the current P and 12.3 is the 10 years average P. Real estate 28.9 is the current P and the P of average is 21.9. Similarly, retail it's 73.8, it's the current P and the average 10 years is almost 82. So I think there's a huge sort of things that can be done through this entire process, or how you say business process works. So ideally you should be able to think and start to utilize this sort of things, or try to figure out. You should be able to study a lot in the sense you should be if you are investing anything, you should be aware what are the factors that will be help you to get a better return. Right. So thanks for watching this video. I hope you like this video. In case you like this, please do like, share and subscribe my channel. Thanks a lot once again.